Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. The Trump administration escalates its response to protests in Los Angeles with a mobilization of 700 Marines, deepening tensions with California state officials. They're now suing the White House for deploying the National Guard. We'll discuss the legal challenge with VanLandingham, a former Air Force attorney and now professor at Southwestern Law School in LA. Meanwhile, Trump admits that trade negotiations with China are hard, with talks set to continue for a second day in London. The focus is on easing tensions over technology and rare earth shipments.
As we've shared, we're continuing our work to deliver the features that make Siri even more personal. This work needed more time to reach our high-quality bar, and we look forward to sharing more about it in the coming year.
Apple's software chief sending the company stock tumbling during the developers conference by confirming they're still struggling with artificial intelligence. We asked Constellation research founder Wang whether Apple's AI challenges will cause lasting damage to the tech giant's fortunes. Well, here's a quick check on the markets. Asian stocks trending higher after U.S. officials sounded optimistic about the first day of trade negotiations in London. But day two may not be so easy. Remember, Trump did say negotiations with China are hard. We're taking a look at dollar consolidating around levels last seen in 2023. Doesn't change the overall trajectory, they say, for the U.S. dollar. Expected to trend lower from here. U.S. Treasuries, the one to watch, steadying after 10-year yields fell to 4.47% last session as U.S. inflation expectations are easing. Bear in mind, though, we're keeping a watch on those 30-year auction coming up later this week. Now to our top story. The Trump administration has escalated its response to anti-deportation protests in Los Angeles by mobilizing 700 Marines and another 2,000 National Guard troops. The move come even though demonstrations in the city today have been largely peaceful with little incident. California, meanwhile, has asked a federal court to halt what it describes as the illegal deployment of the state's forces. Governor Newsom calling Trump's moves the acts of a dictator, not a president. Trump had earlier backed comments suggesting Newsom should be arrested as they continue to trade blame over the responsibility for restoring order.
If I didn't get involved, if we didn't bring the Guard in, and we would bring more in if we needed it, because we have to make sure there's going to be law and order.
Andrew Cuomo, the front-runner in New York's Democratic mayoral primary, told Bloomberg that what's happening in LA could just be the beginning and is part of Trump's formula.
He started in LA. It will happen in New York. It will happen. He knows the formula, right? The flip side is, okay, create chaos in LA, create chaos in New York, create chaos in Chicago. Pretty soon, you create chaos in the nation, and that's bad for the economy.
U.S. law generally bars the use of the active-duty U.S. military, the Army, Navy, Air Force, and Marines from carrying out domestic law enforcement. Joining us now, VanLandingham, former Air Force attorney and now professor at Southwestern Law School. She's also a retired lieutenant colonel in the U.S. Air Force. Professor, good to have you with us. Give us a sense of where you are in L.A. Would you describe the situation for us?
Sure. I mean, my office is actually in downtown Los Angeles, but I'm outside in the suburbs currently. So the situation today, as your reporter noted, it was largely peaceful protest. The protests really started on Friday in response to draconian immigration efforts carried out by ICE agents in Los Angeles and some of the surrounding communities.
Given what you're seeing right now, the situation you're in LA, is there a sense that there's been an overreach of perhaps federal power mobilizing the National Guard and also the Marines?
Well, absolutely, because the responsibility to maintain safe communities in the state of California rests primarily in Governor Gavin Newsom's hands. And Governor Gavin Newsom had the state National Guard that works for him, that has domestic law enforcement capabilities and more importantly, legal authorities to help with policing. They're the ones that should be called in. They're the ones that train under the command and control of Governor Newsom in coordination with Los Angeles Police Department and our other local law enforcement assets to maintain law and order. And yet, Governor Newsom's power and authority was circumvented by President Trump with a premature, preemptive mobilization, really an unprecedented federalization of the California National Guard, therefore taking away that resource from Governor Newsom and putting it under the president's control. However, under the president's control, as you noted, these same troops are now identical to active duty troops. They do not have legal authority to be engaging in domestic policing. Instead, that's a fear that goes back to our founding fathers here in the United States of if the military, federal military, is used to police our streets, used to police Americans, to arrest, to search, to seize, that's what King George III did to us, and that's the mark of tyranny.
We know that Governor Newsom has filed a lawsuit against the administration. How do you see the court responding to that?
Well, to be honest, I think this is a congressional issue. Congress delegated vast discretion to the president under the current statute that he used to federalize the National Guard. And that is, they could be used in cases of rebellion or potential rebellion that seeks to overthrow or to block federal government authority. Because of that vastly vague language, I do think the courts, who are usually pretty deferential, at least the Supreme Court, to the president when he's acting in a commander-in-chief capacity, will side with him because the statutes are so vague and there's been so much discretion given to our president.
With the National Guard deployed along with the Marines, I'm just wondering whether that in fact would or could prolong the violence we're seeing in LA.
Yes, I mean, it's being termed as introducing chaos, inflammatory, provocative. These troops aren't needed, and it's really a huge show of disrespect, especially active duty Marines who are not trained to engage in any kind of domestic law enforcement. They're not needed right now. Why are they being taken away from their fundamental mission to train to go to war, to walk around some federal detention building when there's National Guard there, where there's Los Angeles Police Department and other local law enforcement? So it does seem like it's something that's an intimidation tactic. It's very symbolic, and the facts on the ground are being twisted, and I'm glad that news sources like yours are actually accurately reporting on the status.
You got to wonder about the status of democracy in the U.S. Some say that this is, a prime example of a showdown between federal and state government, and this could push democracy to the brink. Is that an assessment perhaps that you share?
I think it's a bit premature to make that kind of assessment. However, this does provide a precedent for a very different kind of balance between state and federal power and a very different vision of federalism going forward. The last time that the president sent in troops that were not at the request of a governor was in 1965 during the great civil rights racial unrest that we had here in the United States. And there's a reason that hasn't been done since then. Young men and women were killed by National Guard members at Kent State during times of unrest because they're not the resources that are accurate, that are appropriately designed, resourced, and trained to do these kind of missions unless they're doing so in support of local law enforcement. So there's great chances here, not only of pragmatic danger on the ground, but of setting a precedent. If it happens in Los Angeles, is this going to happen up in Seattle, if there are protests against the draconian immigration rates there, or in New York City, or in Minneapolis? It really is it reminds me of, you have military members marching down the streets of our major metropolises. That's what happens in places like St. Petersburg and other authoritarian states, not here in the United States.
To your point, will it impinge the U.S.'s ability to perhaps fight for democracy around the world? If this were to happen in countries like China, for example, if President Xi Jinping were to send his armed police force for an incident similar to what's happening in LA, that could be, a narrative out of the U.S. that it is an aggressive response. You got to wonder how, the rest of the world would respond to the U.S. now, perhaps trying to fight democracy around the world.
Absolutely. We're doing ourselves a huge disservice. We're losing soft power. We're exercising, it looks like we're exercising excessive force, militarized force to repress civil liberties, the First Amendment right to peacefully assemble. Of course, no one wants violence in Los Angeles. Los Angeles has gone through incredible trauma this year, with thousands and thousands of people displaced and losing their homes in the horrendous forest fires we had that started this year. And so Los Angeles does not want violence, but that violence is supposed to be held in check and ameliorated by our local law enforcement, by Governor Newsom. And if Governor Newsom needed help, he would then go to the president and ask for it. Those are the safeguards that have been in place since 1965 to ensure we don't have the repression of civil liberties on our streets by the military being controlled by a tyrannical president.
Professor, as you look at the escalation in LA, what is the best way to actually de-escalate? What's the best way forward? What is the solution to this?
Well, I would hope that Governor Newsom and President Trump would stop trading little sophomore insults on social media or in the news saying we're going to arrest someone and you're going to arrest the governor. Instead, sit down like mature adults and leaders, look at the situation, say, how can the federal government help us? Let's give the National Guard back to Governor Newsom. I do think Governor Newsom should appease the president and assure the good people in Los Angeles that violence is not going to erupt, and there have been eruptions of violence, by keeping the National Guard deployed in certain areas in Los Angeles, but under the command and control of the state governor. And in that respect, they are a citizen soldier. There are fellow sisters and brothers that work every day in Los Angeles and then put on the uniform to work for Governor Newsom. And therefore, there's much less of that threat of it being an authoritarian, repressive tactic. I do think Governor Newsom should welcome the National Guard, but have the National Guard work for him. And I think he should make inroads with President Trump. Thank President Trump for offering to help and trying to help, but they need to negotiate and come to a solution here. This is ridiculous.
We know how polarizing Trump's policies can be, and this is one example of it. And we know that presidents set the agenda. We have also seen how Trump is willing to mobilize tactics that we've seen in LA. How worrying is that?
It's very worrying, which is why I hope that Governor Newsom and congressional leaders, senators, Republicans can go to President Trump and say, you guys need to get together and figure this out. This cannot be replicated across the country. It's bad for democracy. It's bad for human rights, our constitutional rights here in the United States. It's bad for actual law enforcement. ICE has valid warrants. ICE has arrest warrants. If folks don't like those, they need to go litigate and challenge them in court. They don't get to impede law enforcement, whether it's federal or state. But meanwhile, by having these distractions of thousands of National Guard, active duty Marines who have no skill set to be dealing with this kind of situation. It's a distraction. It keeps law enforcement from focusing on their job. It keeps communities from going to through their daily business. It impedes business. And if this was replicated across the country, what does that do to our economy? What's it do to the daily life? What does it do to visitors coming to the United States? What's that kind of message does that send across the U.S.? It really seems to be an incredible distraction, very performative, but a dangerous one. It's dangerous for those young men and women who are in the National Guard and in the Marines who did not sign up to be used like this. It's not fair to the local law enforcement, to our Los Angeles Police Department, our sheriffs, our California Highway Patrol, who are working day in and day out to try to keep our community safe. And now you have an incredibly chaotic command and control with individuals that normally don't train with our local law enforcement. So this needs to be diffused. It needs to be diffused quickly, and I hope mature and cooler heads prevail soon.
Is the U.S. more divided today than just 6 months ago?
It would seem so, just taking the tenor. I mean, I travel a lot, taking the tenor of individuals that I meet with in airports and speak with my students. It seems that individuals are becoming more polarized because of getting their information from particular sources. Folks watching Fox News right now are getting a very different message, and folks watching, the going to social media and only going to their own particular threads are getting a very different message than folks that are getting their news from things like the New York Times or CNBC, et cetera. And I think that's really exacerbating the problem. I think folks need to get out from behind their desks, get off their phones, get out in the street, meet with their neighbors, and just start talking to people. No one wants an unsafe America. We all want a great America. I mean, I wore the uniform for 24 years because I'm incredibly proud of this country, and I have 2 teenage boys that I hope to leave a even stronger country for them. So this kind of thing is very concerning for those of us parents and those of us Americans who love our country.
Right. Professor, thank you so much for your assessment today. Rachel VanLandingham, former Air Force attorney and professor at Southwestern Law School. Now, still ahead on Inside, China says it's tapping an often overlooked pool of funds amounting to $1.5 trillion to salvage its troubled housing sector. Details on the plan coming right up. Keep it here with us. This is Bloomberg.
We are doing well with China. China's not easy. We want to open up China, and if we don't open up China, maybe we won't do anything, but we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
President Trump speaking at the White House about ongoing trade negotiations with China. Trade talks between the U.S. and China will continue later Tuesday after 6 hours of opening negotiations in London. Commerce Secretary Howard Lutnick called Monday's talks fruitful, but there's been no word from the Chinese side on their view of progress. With the talks set to continue, investors are betting on an improving trade picture that's helping to lift optimism towards Chinese stocks. The Hang Seng China Gauge has risen 20% from its April lows, and something Chinese shares have the means to extend a bull market. Everlong has more. People are talking about re-rating, but it's hard to re-rate in a slow growth environment.
Yeah, I think the macroeconomics will still matter at the end of the day, but just taking a look at these gains in Chinese stocks, not just the Hang Seng China, MSCI China also about 20% higher from the April lows now. If you take it back about 2 months, it's roughly 15%. It's worth noting that when it comes to the sectors that have been doing well, it's part of these healthcare stocks that have been driving the rally and helping to get things over the line. And this optimism that things can go further comes despite lingering concerns about whether the tariff relief is going to help offset these deflationary risks in the country. But we're still seeing that swift rebound, sort of feeding into the optimism that this has legs. There's more to come. If you flip the board and take a look at the Hang Seng China's gauge, the gains for this year, it's about double that of the region's benchmark. And in today's Taking Stock piece, you have the likes of UOB Kay Hian, Morgan Stanley, if we can flip the board and take a look at this next page, that kind of cite how global investor appetite and sentiment towards Chinese shares has been improving overall. And it's partly to do with this rethink in US stocks, but I think also there's growing conviction about the consumption theme in China, the tech revival, advancements in biotechnology, and then you also have signs of this earnings recovery on the way, and also perhaps feeding into the optimism, some signs that authorities are a bit more willing to offer policy support, especially when it comes to the housing sector. So all in, feeding into signs that this has room to run. Now, flip the board, even if you look at things on a valuation perspective, you look at the Hang Seng China, it's trading at about 10 times 1 year forward earnings versus about 14 times on the region's benchmark. So even with these outsized gains, it's still relatively attractive on a valuations basis. And I think it was the likes of Morgan Stanley that highlighted that when it comes to long-only global funds, they're still relatively underweight Chinese stocks versus their global EM portfolio. So again, here, that also signals there's room to up their allocation, and all in feeding into signs that there's more to go when it comes to Chinese shares, gains and recoveries.
Well, the thing is, they say that returns will amount to about 10% versus historical averages of 20%. So well, the risk is there. Avril Hong, thank you so much for that. Now, China tapping an often overlooked pool of funds worth $1.5 trillion to salvage its housing sector. The Housing Provident Fund, a program which China adopted from Singapore 3 decades ago, offers buyers an alternative to bank loans. Lulu Chen leads our Asia investing and real estate coverage and joins us from Hong Kong. Lulu, why is the government tapping into the Housing Provident Fund? I mean, it is a huge fund.
That's right, Haslinda. Well, the Government Housing Provident Fund is playing an increasingly important role in supporting China's ailing property sector. Now, this is coming at an important time when commercial bank lenders are scaling back, becoming more prudent and cautious in giving out loans and mortgages, when they themselves are facing record low margins and also rising bad debt. So what is the Housing Provident Fund? It's a program, a savings program that the government started 3 decades ago. Traditionally, users face many restrictions using this pool of money, but essentially after employers put money into this fund every month, people can get mortgages out of the fund, often at lower interest rates compared with commercial banks, and then they can use part of that money to buy homes in China.
It is a front runner among policies. What's the reason behind the growth in the usage of the fund?
So when you look at the growth, the outstanding amount of loans, the growth increase has actually outpaced that of commercial banks. The total amount of outstanding loans in the Provident Government Fund grew at 3% last year, whereas for commercial banks, that number dipped. And the reason that it's rising right now is because some 50 cities across China, municipalities as well, they relaxed rules on how people can use these funds. In the past, people were capped by either how much they put into the fund or their marital status, and now these cities are relaxing the rules so more people can tap into that fund to buy their homes.
And Lulu, I guess the question really is, will it be enough?
Yeah, that's a great question. I think as of now, allowing more people to access this pool of funds is more of a support measure for the property market that is still expected to drop 10% in sales this year. It won't be a turnaround. It won't turbocharge the real estate market in China, but it is plugging an important gap that the banks are leaving in financing.
Lulu, thank you so much for that. Bloomberg's Lulu Chen, who leads our Asia investing and real estate coverage. Now, still to come, Constellation Research will be joining us to assess the fallout for Apple as its developers conference fails to spark excitement about its AI catch-up plan. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. We're keeping an eye on Apple's Asia suppliers this morning. This after the tech giant unveiled its most sweeping software redesign yet at its Worldwide Developers Conference. But as Bloomberg Technology co-anchor Ed Ludlow tells us, the iPhone maker failed to impress investors who were looking for more on the AI front.
The core of Apple WWDC was Liquid Glass, a new operating system interface that basically takes the UI for all of Apple's operating systems and makes the design more uniform. The UI is translucent, it's able to adapt to content and context, but it's very much based in the work that Apple has already done with Vision Pro and the OS for that platform. They're also changing how they name OS. We're going from a version-based labeling system to a year-based one, but for the preceding year. year. So for example, for iPhone, iOS 26 will be the latest version. Away from that, just remember that WWDC is a developers conference, and probably one of the biggest pieces of news was that Apple will let third-party developers have access to Apple's on-device large language models. In other words, the developer community can look at Apple's technology, its existing work in AI, and use those tools to help develop apps for the Apple ecosystem. And that's the big part of WWDC. It's not just one single day. It's a time where all of the developers that have been so key in growing the ecosystem for Apple come together, and Apple can say, this is the tools that we've got, you can build on top of them. The stock did drop sharply, literally in the opening minutes of the keynote presentation. And a part of that was senior Apple executives basically saying, we have nothing to say about Siri right now. The kind of core of Apple Intelligence and Siri, the delay to some of that functionality, and we won't hear more about that later in the year. Even though expectations around what Apple would or would not say around AI were pretty low going into this, it's a stock that's been under pressure year to date, underperforming many of its Mag 7 peers. But that trading so far in 2025 has been trading on trade risk, tariff headlines, not necessarily on the AI story. The concern coming out today was, well, did we hear enough that we understand the roadmap forward when it comes to Apple and AI? For example, in some of the tweaks and iterations they announced, we saw a deeper integration with OpenAI and ChatGPT than we did Apple's own original work in AI. Even so, the thing about liquid glass and a new operating system interface is that it kind of hints at Apple's next era for design, a software foundation. But read between the lines, take the name liquid glass, and you might learn a little bit about what's coming next for Apple's hardware as well. Ed Ludlow for Bloomberg News in Cupertino, California.
All right, let's get insights. Wang, founder at Constellation Research, which studies disruptive business and exponential technology trends. He's joining us live from the scene of all the action, Apple Park in Cupertino. Good to have you with us. I'm just wondering, right? I mean, this was pretty much expected. Apple shares slumped in the lead up to the event and then slump again after that. That was going to be disappointment.
Yeah, so what happened, right? We're down 1% at the moment. And Linda, as you know, the big thing that's happening here was really a couple changes in the liquid glass. As Ed Ludlow mentioned, right, the beauty is really the change in the design. It's across all the different OSs, whether it's an iPad, an iWatch, whether it's sitting down on your iOS for your TV. All those things are actually on the same redesign, which they haven't done in a decade. Now, what that tells us is there's a lot of spare capacity in the Apple chips to be able to do that. And that spare capacity is also this capacity that they can use for Apple Intelligence in the future. We didn't get the big bang announcements, and that's what people were looking for. That's why shareholders were disappointed. But at the end of the day, talking to developers, a lot of these capabilities of AI are what we call ambient experiences. They happen in the background. It's the nudge. It's going through your email and realizing, you know, you're interested in cats today. You're interested in chocolate. You have a birthday that's coming up. And the beauty of that is consumers trust Apple to keep that data private. And one of the things that they emphasize continuously is the fact that that data is something that even Apple can't even unlock or see. And that's what's going to be important going forward in the age of AI is what's the level of privacy, what's kept in terms of the data on your device, and how you can access that. Now, the second piece is really the piece of accessing large language models. There's 1 billion parameters on this device that will be accessed, which means developers can do a lot of AI at the edges. AI is moving from centralized big blobs of AI to where it happens on the edges, on your phone, in your house, at the edge of a computer, inside an environment, at the stadium, right? These are things that are going to happen without being connected back to the central net or central internet. And that's going to be important as we go forward. And there's a lot of devices. It's a $400 billion ecosystem that's going to be unleashed. But the question is when? Is that going to be September? Is that going to be next year? That's why investors are trying to figure out.
And that's it, right? It could even be longer than that. The silence on Siri, for instance, was really, really loud. People are asking, how does Apple jumpstart its AI strategy? How does it do it?
Well, a lot of it's going to be built. It's already there. It's already there in the hardware. It's already there in the devices. But the challenge is, can they get Siri to operate in a way that consumers are going to be comfortable? Are they going to trust it? Is it going to be in a way where it takes advantage of different language models as things change? We're in an era where we've had traditional machine learning and AI for a long time, and that's 2 + 2 = 4. We've had generative AI where 2 + 2 might equal 4, and it guesses, and it's probabilistic. And now we're in a world of agentic AI where 2 + 2 = 4, and what do you want to do with it? And that's where it gets interesting. And inside, a lot of what Apple was showing was there are a lot of tasks that can be automated now inside the OSs, where you can take little things, automate, and move files. It's the beginning of that AI revolution. You can see it if you're a developer. You might not see it as a consumer yet, but you know something is coming, and you just don't know when.
Ray, the concern is that it is a competitive space. Investors are worried when it comes to competition out there, companies going all in on AI, and they're not seeing that when it comes to Apple. How are you assessing the competition in this space?
There are a lot of potential competitors. In the age of AI, any person, any company with 3 or 4 people could actually take out $1 billion company. That's how powerful AI is going to be. But here we have a situation where Apple has some moats. It's got the data, it's got the billions of devices, and of course, it's got all the money in the world to actually make something happen. That is something very hard to beat. But there are competitors out there. Google's Gemini is getting really good. Facebook's done a great job with Meta and the glasses and what they're doing in terms of their language models. And of course, we've seen Sam Altman pick up Johnny Ive at OpenAI, and that could be an interesting thing. Could it be a new device? Could it be a pendant? What's that future going to look like? And of course, there's a number of Chinese startups that could possibly build something that could take advantage of that consumer environment, along with Huawei and other folks in that space. But still, you've got a loyal base of 1.3 billion users. You've got a $400 billion ecosystem. It's very hard to beat. They just have to get the AI piece out there, and consumers will be able to jump in on it. That's really the unlock. And of course, there's the services revenue is really dependent on all these AI features. But we saw a lot of interesting things. The iPad now works more like a MacBook. That's a huge accomplishment. We saw universal language translation. We always dreamed about in Star Trek with the universal translator. Right now, I could be translating into Hindi, Chinese, French, Spanish, and you could hear the streams, see the streams, whether it's in your video, whether it's in your email, whether it's in your text. It's all happening in real time. And that's also another piece of AI that's out there, but it's still not that big bang that investors are looking at.
So, Ray, if you are right, if it's just a matter of when, would you buy the dip? Have you been buying the dip? We know that it is down 16% year to date.
Definitely. I actually am long on Apple, and I believe that's a $250 call here in terms of their ability to get there. We're waiting for the new iOS release, the new phone release, and of course, what happens by the end of the year. If it's passed within a year, hopefully at this time next year, you'll be hearing about what those AI advancements are. But also, I mean, you're going to see a lot of change as well in the marketplace as competitors move around. So it's still a very tumultuous market between tariffs, between what's going on with the trade war, and of course, what's going on with what's happening overall on the AI side. But we've got the India market on the front end. We also have the services revenue in the future, and we've got a few new releases, part of this AI replacement cycle that's really important.
Ray, you talked about DeepSeek. I'm just wondering, how are you assessing China's AI capabilities? Has it accelerated since DeepSeek?
So there's been a lot of great startups, especially saw Alibaba has now overtaken DeepSeek as the reasoning model that people are looking at. But the challenge isn't that. When you're competing on AI, one of the key ingredients is the cost of power. China is ahead because it's at 8 cents a kilowatt hour. It costs 16 cents a kilowatt hour to produce electricity in the US. That's a 2x difference that you can't overcome. And of course, we have a chip advantage in the West, but China is catching up very quickly. And of course, it's the adoption and the models, right? China's push to open source, that big race to get all these reasoning models out there, gives them a slight edge at the moment. But of course, you never know, right? There's still some level of American innovation that you never know what to expect.
The thing is, how quickly is China catching up?
Well, it's a question of what you're trying to do. If you're trying to solve the problem of general artificial intelligence, the U.S. is still ahead. If you're trying to solve problems that are actually, in front of you, simpler things with reasoning engines, less power, less chips, less costs, I think China is actually pretty close to the U.S. at the moment. It's neck and neck. I think the way to look at this is really the use case of what you're trying to accomplish in AI. If you're in the business and the enterprise software side, the U.S. is quite ahead there. But if you're looking on the consumer apps and what might show up, China is definitely neck and neck.
Ray, before we let you go, we can't talk about AI without talking about NVIDIA. Is that still a buy? How high will it go?
Well, NVIDIA was a buy maybe a week ago. Now it's a little bit tougher. But if you believe what's going on in terms of who's buying, well, 6 out of the 7 of the Mag 7 are still buying a lot of NVIDIA chips. And that's an important fact. And what we're trying to figure out right now is for that demand and how much the demand is going to continue. And if you look at Blackwell numbers, right, you look at Rubin, there's a huge demand right now as people are getting their Blackwells. You're starting to see people prepare for like the next set of releases in terms of the buying patterns, and the capital allocation hasn't changed, right? You look at what Microsoft is spending, you look at what Amazon's spending, you look at what Google Cloud's spending, they are still buying big. Folks are definitely, we've got sovereign clouds coming into place. You saw that $5 trillion was 5 trillion, actually. It was 5 billion. No, it was 5 trillion. We have $5 trillion of direct foreign investment from the Saudis. Like, you just think that's such a big number. Like, you've got $2 trillion of government funding that's coming in. I mean, it's still, we're like inning 3 of a 9-inning baseball analogy, very American, that's happening at the moment, but we're still at the very beginning of what's going on here.
Definitely a trillion, and it's mind-boggling when you take a look at the numbers. Ray, thank you. Ray Wang, founder at Constellation Research. And just some headlines to tell you about. According to Xinhua News Agency, China's Xi Jinping and South Korea's Li holding that phone call. Xi urging China, South Korea to safeguard free trade. And he's also urging China and South Korea to jointly safeguard multilateralism. Of course, this is happening against the backdrop of U.S. tariffs. She says China and South Korea will promote partnership to a higher level, and that South Korea's Li, of course, held that phone call with Xi Jinping recently. Of course, the headline is that Xi urging China and South Korea to jointly safeguard multilateralism. Now, still to come, Franklin Templeton Institute explaining why they're bullish on India as New Delhi works towards a trade deal with the U.S. Keep it here with us. This is Bloomberg. $11:45 here in Singapore, and that means India has just kicked off its trading day. The Nifty and Sensex has been on a 4-day winning streak. And by the way, the Nifty at an 8-month high after the RBI surprise cut of 50 basis points. Expectations were for 25. Take a look where we are in terms of the Sensex, currently up by 1/10 gains to for the other benchmarks. In terms of the rupee versus the USD, flat at this point in time, usually is as we kick off the trading day. 85.58 is what we're looking for. The rupee down for 3 days in a row. Well, let's talk India and other markets. Christy, investment strategist at Franklin Templeton Institute. Christy, good to have you with us. Time to be bullish India, you say?
Well, definitely. Yes, I think we are definitely looking at, some of the upside risks to India, and not just within the equity market space, but it is also important to see what the foreign investors are seeing and valuing the Indian fixed income markets. And we're looking at evidences of the Indian fixed income markets garnering some, I would say, bullish inflows, and especially in the short end. And this is notwithstanding the weaker rupee. So I think that carry attractiveness is definitely still prevailing in India. And if you look at the rupee, is there room for concerns? I think to a certain extent, yes. But at the same time, the rupee is probably the only currency within emerging markets or Asia that hasn't responded to a weaker dollar environment. So there's scope for that.
It is an RBI that is more than happy to keep a stable rupee, isn't it?
Yes, yes. And I think we've seen some of the rate cuts that RBI has sent down, some of the chill in the spines of markets with regards to the rupee. But at this point in time, there is no reason for the rupee to weaken significantly further. However, of course, I think a recovery in the rupee definitely needs some form of push, either from the central bank or from the monetary authorities, basically allowing some more stability within the policy segment.
It's not just India that's exciting traders. It's the emerging market as a whole, and disinflation in China is actually propelling that view.
Yes. So we're looking at essentially, at the start of the year, I think our view is that emerging markets should be a part of core portfolio strategy, not just as an alternative. And this is, I think, manifesting right now, mainly because if you look across the Western developed markets, you have the problems that are definitely looking at like debt, definitely looking at inflation, and also at the same time policy stagnance. So when you come to emerging markets, we don't have those problems. Debt is under control, inflation is under control, and policies are definitely easing and growth supportive. So I think at this point in time, emerging markets do look really attractive.
Which emerging markets in particular?
That's a really good question. So if you look at the Latin American complex, that is really looking appealing. And as a whole, be it in the respective asset class of equities and fixed income, but especially equities. And if you look at the rest of the emerging markets, I think we like Turkey in terms of the fixed income sector, and also even Mexico. So at this point in time, I think Latin America stands out in its own, but across the emerging markets complex, Indian bonds is looking great, China fixed income as well. And so there are pockets of opportunities that are sprouting out within the emerging markets complex. And the main structural fundamentals, and we are saying back to fundamentals, the main fundamental reasons are basically debt if issues are under control. And in fact, we don't have the debt issues that we're facing in the US, for example. And also, inflation is not an issue. And in fact, we're having disinflation or deflationary environment in emerging markets, and policy will be growth supportive.
You talk about China. It's interesting how the Chinese stocks trading in Hong Kong are in bullish territory. Can that continue?
Well, I believe there is still some legs for this to continue, and we're looking at markets that are moving between sentiment-driven and fundamental-driven. So both are actually supportive of the Chinese and the Hong Kong markets. And I think the Hong Kong markets and the investors looking into Hong Kong and China are looking beyond the trade tensions and the trade war and the tariff issues. So they're actually starting to look at fundamentals. So what's supporting fundamentals? A markets that's been undervalued for a prolonged period of time. And at this point in time, there are actually attractiveness and upside risks to those valuations. And companies are actually doing pretty well. If you look at China, right, as a whole, export as a percentage of GDP is not that great. Right? Exports to the US as a percentage of GDP is maybe 0.5%. So all these tariff wars and looking beyond that, companies and earnings, valuations are all in favor of this market.
Let's pick up on valuations. Some say they're not as cheap as some people make it out to be. You take a look at valuations, 14% premium versus 20-year average. And I'm just wondering if expected returns are expected to be at about 10% versus 20 previously, then perhaps it's not the way to play.
So this is where the stock picking skills come into play because, the market's not uniform. Definitely, I think if you look at some of the sectors, tech, and but then again, with the progress in tech and AI, the valuations of the past may not be relevant for the future. So it's really that earnings prospect. And if you look at, in the US, valuations have been stretched, but stock prices continue to just go higher and higher. So I think in China and Asia, as a whole, valuations is one aspect where we're definitely monitoring very closely, but we also emphasize on the earnings of the companies and the prospects of these earnings to sustain in the medium to long run.
So in terms of sectors in China, what would look attractive to you? I mean, some say financials are pretty attractive.
Financials, yes.
Tech?
Stable, tech.
Healthcare?
Well, you named it, biotech. I think these are some of the sectors that have the support from policy, from fundamentals, the demographics, and at the same time, I think they were under-owned, under-invested in the past. So that's where we think.
As we talk about an easing of US exceptionalism, Europe is becoming more attractive. How are you looking at that market?
Yes, so this is also an interesting market, and definitely I think with the U.S. exceptionalism coming under scrutiny Europe and the defense sector, and the way that I think the European policymakers are emphasizing on fiscal expansion of this, and they are actually coming on from a also, from a monetary policy standpoint, easing policy stance, even though we're nearer to the end of the policy cycle, but there's still some easing of this room to have. So, as a whole, I think European equities markets, European fixed income, in fact, I think equities more than fixed income are looking really, really great, as long as they're able to maintain that diplomatic and, maintain also that geopolitical situation under control. Europe has in the past been under-owned, and this is just the beginning.
It is a higher yield environment, and some say yields are headed higher. At what stage and how much of a risk is that to stocks?
Well, in a market that is very fickle, I would say that...
Which we are in right now.
Which we are in right now. So it is still very sentiment driven. So there's also that question whether or not Europe's gains are structurally sound. And I think markets at this point in time are very mixed about that. So putting a number to it is really a big challenge. I'm afraid that, it could turn the next day. And I think at this point in time, what we're looking at is that some of the sectors, infrastructure, defense, this have that fundamental backdrop that should be able to weather some of that sentiment-driven volatility. But I can assure you it will still be a very volatile market.
Final question, and very quickly, the best bet for 2025?
Emerging markets, I think we look at selective fixed income opportunities, and also in the equity space. And I think, if you're in the camp of U.S. exceptionalism under scrutiny, you would look at emerging markets as well as some of the credit sectors that are looking attractive.
Great having you with us, Christy. Thank you. Christy Tan, investment strategist at Franklin Templeton Institute. And before we go, here's a look at what to expect tomorrow. Former Assistant U.S. Trade Representative Jeff Moon will be breaking down 2 of the U.S.-China trade talks in London as markets watch for signs of comprehensive tariff deal. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.